High-yield bonds, also known as junk bonds, are bonds issued by companies with a lower credit rating than investment-grade bonds. They offer higher yields to investors due to the increased risk associated with investing in these bonds. In this video, we will explore high-yield bonds in greater detail and discuss the potential benefits and risks of investing in them. What are high-yield bonds? High-yield bonds are debt securities issued by companies that are considered to have a higher risk of defaulting on their debt obligations. These companies typically have a lower credit rating than investment-grade bonds, which means they are considered more likely to default on their payments. As a result, high-yield bonds offer higher yields than investment-grade bonds to compensate investors for the increased risk. High-yield bonds are typically issued by companies that are in need of capital but are unable to obtain financing through traditional means, such as bank loans or investment-grade bonds. These companies may be in industries that are more susceptible to economic downturns or have a higher level of debt. One of the main benefits of investing in high-yield bonds is the potential for higher returns. High-yield bonds offer higher yields than investment-grade bonds, which can be attractive to investors who are looking for higher returns on their investments. Another benefit of investing in high-yield bonds is diversification. High-yield bonds often have a low correlation with other asset classes, such as stocks and investment-grade bonds. This means that they can help to diversify an investor's portfolio and reduce overall portfolio risk. While high-yield bonds offer the potential for higher returns, they also come with greater risks. The main risk associated with investing in high-yield bonds is the increased risk of default. Since these bonds are issued by companies with a lower credit rating, there is a greater chance that the issuer may default on its debt obligations. If the issuer does default, investors may lose some or all of their investment. Another risk associated with investing in high-yield bonds is market risk. High-yield bonds are often more volatile than investment-grade bonds, which means their prices can fluctuate more rapidly and unpredictably in response to changes in the market or the economy. Finally, high-yield bonds may be less liquid than investment-grade bonds. This means that it may be harder to buy or sell these bonds, particularly during times of market stress. High-yield bonds can offer higher yields than investment-grade bonds, but they also come with greater risks. Investors who are considering investing in high-yield bonds should carefully evaluate the risks and rewards associated with these investments, and consider whether they are an appropriate addition to their portfolio. High-yield bonds may be suitable for investors who are willing to accept higher levels of risk in exchange for higher potential returns. However, investors should also be prepared to tolerate greater volatility and the possibility of losing some or all of their investment.